Today, we'll be talking about the features of DEXes and some risks in DeFi to watch out for. We're being joined by Karan from WingRiders and Salvatore from DeFi Yield. Thanks for joining us again.
Hey, both of you. Good to be here again.
Hey, guys. Happy Friday.
I'm your host today, Emmanuel, and it's features of DEXes and risks in DeFi. Let's get into it. Let's start with, and as always, as before, we're going to start with a brief, discussion period of about 30 to 45 minutes. And then we'll transition more into a bit of a Q&A session with the community. So let's start with Salvatore, right? Let's DeFi Yield. You gave us a very amazing story, in a way, very intriguing story and captivating story last week, and it's something which I thought about a lot. So I'm sure this is something that, this topic is something that's very close to home for you and your team. But let's do some ABCs for I imagine DEXes are a common thing you use every day, Salvatore. Can you give us a bit of like what some of your favorite things are like in a DEX? What do you like to do in a DEX? Every time you open up your browser and you connect your wallet, like what's your go-to thing? Tell us a bit about your day-to-day with DeFi.
Yeah, first and foremost, I do use DEX on a daily basis. Mainly, I'm not kind of a degen guy, to be honest with you. I'm really conservative due to the past experience, bad mistakes as well. DEXes, I use DEXes just to usually stick some funds on particular puts, or even it really depends, right? Because if I go on DEXes to I want to change some, I want to swap some token, or I want to put some funds and earn some yield. I'm not that kind of guy, let's say, that really try. How can I say it? I don't really go to degen, to be honest with you. So I'm trying to keep my risk ratio really low. So I do very basic things on DEXes, but from token swap to liquidity. I provide some liquidity to single staking pool, for example. I used to provide 50-50 liquidity on several DEXes, but obviously I just wanna, let's say, avoid impermanent loss risk, so I don't do that anymore. But yeah, this is pretty much what I've been doing. I'm sure we can dig a little bit more for newbie listening here on what an impermanent loss is, and potential risk when you're using certain platforms and so on. So yeah.
Yes, indeed. We will definitely be diving into a lot of these concepts, such as impermanent loss, which you try to avoid by mitigating your risk. And you've mentioned, quite a few things we talked about in our thread this week, essentially around providing liquidity and staking your tokens to generate yield. It's good to have a good insight as to how you go about your daily life in DeFi with DEXes. Karan, you want to add a little bit to that? From your experience, what your day-to-day is like?
Yeah, I have to say I am active on our own DEX, I have to say, always kind of trying different things. But, it comes down to I don't move around a lot. So once I've provided, for instance, liquidity, which I do, and I farm, because on our DEX, obviously, you get really good returns essentially. So I do experiment with that, but I don't hop around too much. But I continuously kind of do research, because obviously the kind of yields do fluctuate in the kind of liquidity pools. The returns do change. So I keep my eye on it. And when I find a better opportunity, I might move my liquidity to another pool, etc., and then farm that farm. So that's it. In terms of kind of movement, I don't do it every single day in terms of the liquidity pools and the farms, but when I find a better opportunity on the DEX, I do move my liquidity around in there, whatever my kind of research points to. Then the swap function I use when I see a good project that comes along, do my research again, have a look at it. If it's interesting, then kind of there's a pool out there, and I kind of provide liquidity. I get the tokens first, which I probably don't have, and I've done that many times, and provide liquidity to it. So use a swap function to get tokens I don't have, and then provide liquidity, and that's the gist of it, really. Yeah.
Awesome. Thank you for that. And to those who are listening in, you can definitely catch up on what we'll be talking about. Just look up the pinned tweets in the Jumbotron and get caught up. But yeah, no, we're talking all about DEXes, and we keep saying DEXes, but to those who just popped in, DEX is just the short form for decentralized exchange. And yeah, I mean, DEXes are still very new to the world of finance. I'm sure most of us are used to the concept of order books and how they pretty much worked in a way where you'd probably make a request to sell a given asset, and you'd have to wait for someone else to actually show interest in your assets and your rates before they would buy into it. So you'd have this little buy and sell interaction going on in an open collection of different orders. And this is very common in your Coinbase Pro and your Binance Exchange, on your Robinhoods and e-traders and everything. But AMMs, that's automated market makers, are these novel approaches to DeFi that largely came from the Ethereum ecosystem, that really took away the need for a central trading body or the need for a certain counterparty. AMMs introduced these concepts of liquidity pools that essentially you could go to find out if your assets are being traded down. Then you could just seamlessly swap one asset for the other. Salvatore, maybe you can give us a brief deep dive into AMMs per your experience, and also just let us know, you've already mentioned how much you provide liquidity, or usually experience a lot of staking activity. In comparison to order books as well, maybe you can share. How do you feel your experience has been like? Do you prefer AMM DEXs more to, say, order book, exchanges? What is your takeaway from that?
Okay, so from the newbies, let's say, point of view, we need to let them understand what's the big picture, right? So let's say there are two ways to trade in the stock market, in the traditional market, let's say, and that's exactly the same for cryptocurrency, right? There is an order book and the automated market maker. So both have pro and cons, and obviously both can be used, let's say, in a different context, in a different way, right? So to simplify as much as I can these two concepts, right? Order book and automated market maker. Order book is essentially is the usual way that when people trade, right? It's the best. I mean, I would say could be the best way to trade, but sometimes they're just unsuitable. So let's say order book are mainly for liquid market, right? This is the normal way how you trade, right? Imagine any platform. I'm not going to mention any of them, but imagine a platform. You have a book with all of the order, where you can see, all of the prices. People can book order in. Everyone, let's say, is aware of where the market is, right? We can check the volume. We can check the total amount that people want to trade. So that usually for us, for let's say for big asset, let's say as a Bitcoin, for example, is perfect, which is extremely liquid. So we can trade even a small portion of volume of lot, and then obviously we can decide at what price we want to fill that order. Either it's a big, let's say big order or small order. And then the pro and cons, I would say, with the order book, you can see the price, check the volume, bid on the particular price, so you have an instant kind of trading and price discovery. So we can see, as I said, we can see the price on the order book. And in the opposite side, we got the automated market maker. So to simplify again, order book, you can see the price, you can check what price you're going to put your order, you're going to check how much you want to put in. When it comes to automated market maker, let's say it's like a system which relies on it's a system which relies on a smart contract, right? So they kind of solve the liquidity problem when people want to start and sell on different prices. Obviously, this is very, let's say, the AMM is really useful, especially when you want to trade small coins, right? Because you just get single market price. You can just let's say you are relying on the platform technology in order to fill up your order at the best price, right? And obviously, the cons in here is like, one of the cons could be that you might suffer as well on a slip page. For those who don't know, like the slip page is when you press buy, like to swap a token, for example, from the time you press buy and the time that your order get filled can be like instantly or not, depends on the market, depends on the volume, depends like on the particular moment you are doing that specific action. So the slip page is the difference between that specific time, is the price. Let's say if you any DEX, you can check the slip tolerance, right? So the price might change when you press for the order. So it's something obviously that you cannot really control. That's why you have to rely on specifically on the platform itself. Yeah, that's pretty much like an understanding on a very basic level of AMM and order book.
Thank you for that, Salvatore. Definitely thank you for that. Karan, maybe you can share what your pros and cons have been like in comparison with order books and AMMs. What's your experience been like?
Sure, yes. I think Salvatore has covered a lot of the key issues there and pros and cons. But I can take you historically. I mean, the first order book DEX, which was a blockchain one that I had experience with, I think it was 2016. It was called Ether Delta, and there was another one called Murtadox. Now, those didn't work out very well, realistically. There was just not enough liquidity. And the way it works with the order book DEX is on a blockchain, people literally put in price points. So there's always buyers and sellers, bids and asks, as they say, in the centralized world. So there's buyers and sellers. But with an order book DEX on a blockchain, essentially you're going to have a lot of gaps. So there's people who want to buy at a price, and there's no sellers. So that's kind of what happened, I remember, in 2016. So I was putting in orders and literally they weren't filling for maybe days. So obviously these problems, I think, have been ironed out slightly, but you don't see many order book DEXs still around. Most of the models seem to work much better with the liquidity pools. I believe there's only one DEX on Cardano at the moment that has an order book model, but they're also supplementing that with an AMM model to kind of overcome that problem that we just explained, that there's going to be order gaps. So the main order book DEXs are all centralized. Okay, so it would come back to the same issues of decentralization as opposed to a central authority. The order book DEX has got your money at their dispense, and if they get hacked or if something untoward happens and they rug pull or something, it's all gone. Whereas obviously a DEX, it's non-custodial. You hold onto your funds when you're doing an exchange, for instance. Also, there's no need for KYC, which is still good. Obviously, regulations may change that, but a lot of people want to stay anonymous, flipping their coins and doing whatever they want to do, which is fine. Blockchain is extremely safe, I would say, whereas security on a centralized exchange that operates order book is very much vulnerable to attacks. And as we've seen, Mount Gox was one of the first big kind of rug pulls that happened, and hacks happen all the time. We've seen it happen with all the biggest exchanges, including Binance, Kraken, all of them. Okay, they've got like insurance funds that they try to obviously do good by the people who are obviously they holding their money, but you don't have to worry about that in a decentralized exchange because you hold on to your money. It's non-custodial. Obviously, what else I would say? The other thing I think is really cool with the DEX, and that's how I first got into them, is there were certain coins that weren't listed on a centralized exchange. Okay, and what happened was that you're looking for a token, it's just been released, and guess what? It's going to be on one of the DEXes, right? And that's another great kind of, I think, facility, if you like, that DEX provides, that you can open up a liquidity pool and you can dip in and out of it, even though that coin might not be listed on a centralized exchange. So yeah, those are my kind of add-ons to that, I suppose.
I think I just want to add one thing on top of what Karan just said. I think it's also beautiful from the point where people want to, let's say, invest in certain coin, which, let's call them gems, right? And you're not going to find any of them anywhere. So DEXs are like the places where you can, put some money on the project that you actually believe, right?
Yeah, no, definitely. And to all those who are just joining in, like, for example, WingRiders is one of the most common DEXs and popular DEXs on Cardano that allows you to do a lot of like what these two gentlemen have expressed on. I see we're joined here by Randcore. He is one of the most active DeFi participants, not just in Cardano, but also in the Ethereum ecosystem. And he's actually got a major event coming up in the future, which is largely focused around DeFi as well. Think that's the Reblem event. But glad to have you here, Randcore. How's your day going?
Going amazing. I really appreciate you having me on the panel up here, and this is a great speech. Lot to learn and listen. Really like the WingRiders DEX, and excited to kind of listen to what's going on and chime in if I can.
Yeah, totally. In fact, I may have a question for you just now. Like, what was the name? Maybe you've definitely heard a bit about what we just discussed around, AMMs and order books and just the various things that some of our co-hosts, enjoy doing, such as, performing certain swaps or just providing some liquidity for yield farming. Maybe you can tell us a bit about yourself through your trading habits or your DEX habits. Do you consider yourself like more of a conservative trader where you just come in, do a few trades and call it a day? Or are you someone who, goes all in with liquidity, then moves on to yield farming? Tell us about your everyday or your common trading strategies with DEXs and DeFi.
Yeah, I appreciate that. That's actually a really good question. I would say it just really depends on the trade. So like as a very conservative trade, always happy to pair some stable coins with layer ones that I enjoy, and provide liquidity and have that type of just stable APY coming in on those and providing liquidity to those. And then there are other more complicated, probably higher risk trades, where I will go yield farm new tokens, new DeFi tokens, maybe provide liquidity where I'm getting added incentive or yield. And those are very quick trades, something that I'll watch very closely. I consider them active, open trades that need to be closed at the right time. So it really just depends on what I'm looking at. If I'm pairing like a layer one Ethereum to a stable token, I kind of let those LP tokens ride. And that type of a trade is something where, length in the game is where I'm getting what I want out of there. And then something a little smaller where I'm like farming a brand new DeFi token or some other token of some kind. I consider that more of like an active day trade, and we'll watch the position a lot more closely.
Right. So let's say, considering like your everyday portfolio, you don't have to give us any specifics. How do you usually go about this? Are you the kind of person to like, kind of dedicate a huge part of your portfolio to the liquidity pools you provide liquidity to the yield farming tokens you stake with? Like, what's that like to you? Are you the kind of person who's like, oh no, I only do like 10% of all of this stuff in DeFi and kind of stay on the safe side? Like, maybe a bit of that.
Yeah, I definitely think portfolio management and risk management is very important. I don't like to go over 10% of my entire portfolio in any one trade, whatever that may be. So I try to kind of limit those and, de-risk if something's running up above that 10%. Happy to take a little profits off the table and put some cash back in my pocket to fire at another trade at a later date. And it really depends. Like if I'm doing something conservative, like an ETH layer one, where I'm just holding the asset, I'll let that stay up around that 10% mark. Whereas if I'm doing something a lot more risky, I'll try and use only, 1 to 3% of the portfolio at a time. Just so that way, if I do get a full liquidation or a rug pull happens, I'm not losing so much of the portfolio that it really affects me. And it's enough that can be made back in a trade or two. I always like to say the name of the game is to stay alive and not put yourself at full risk of being removed from the market entirely. That's my personal take on everything, is to just stay alive and stay in the market during times like this.
Yeah, I definitely agree. Staying alive, especially as a newbie into DeFi, is most likely the best approach to take in order to prevent a lot of mess ups and loss of funds. Salvatore, maybe you can share a little bit onto what Ram just shared in terms of portfolio management. What is that like for you? And I'm glad Rand mentioned things around liquidations, because that's something we'll definitely touch on as we proceed. But Salvatore, a bit on portfolio management in regards to how you allocate in DeFi.
Yes, right. First and foremost, we need to understand, are you a long-term investor? Like, what's your risk appetite, first and foremost? Secondly, are you a trader? Do you want to be a trader? Are you an investor? Do you want to trade like a spot? Do you want to trade futures? And so on, right? So we need to differentiate a little bit these two things, because when you are a trader, of course, usually you have a short-term goals, let's say, especially if you're trading derivatives and so on. These are short-term assets, let's say. And on top of that, you are, there's a leverage. So you can leverage actually your amount of investment, because the platform, okay, let's put it in a very simple way. You can put 100 quid and leverage by 10x, right? Which means your total investment is going to be 100 quid per 10, right? So you are moving 1k of that specific asset. So this is a very, 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 very risky one. I'm not a trader. I mean, I don't really like trading. I do trading from time to time as because trading's involved a very high, let's say, knowledge, right? Research as well. But when it comes to in investing, right? When it comes to investing, I think there are several steps, I would say, before investing into a project. But again, how much you are willing to, what's your risk appetite? How much you're willing to risk, first and foremost. Secondly, psychological mindset. Mindset is really, really, really important, because from a very and I used to do the same mistake, right? Because I was just following people around and going informal, because all of these people were shilling stuff around. This is a very important thing, I would say. So instead of just instead of instead of rely on someone else, I would just spend much more on my time just learning, studying, doing my own research, right? Then obviously when it comes to investing, there are different way of investing. The most common way of investing, of course, DCA, which is dollar cost average. If you don't know what that is, you can easily Google it. That's really the simplest way of investing. And obviously you could potentially do it on let's say on the strongest project, strongest asset. So the steps, I evaluate my profile risk, I evaluate my time frame in terms of, okay, do I want to do trading or do I want to be an investor? And then it's all about research. How in depth are we actually willing, first of all, and secondly, how much time you want to put into the specific research, because at the end of the day, as much data as you have on your side, as much, let's say, clear you can make a decision, right? It's all about decision here, like what asset do I want to invest my money on, how much do I want to risk. Yeah, that's pretty like very basic overview, let's say, of investment.
Thank you for that, Salvatore. So due diligence and a practice known as DCA when it comes to your approach of portfolio management and in regards to DeFi. Karan, did you want to add in on a little or?
I think both the speakers have pointed out some of the most important things. Great points there. And yeah, risk management is definitely number one. I mean, I come from a kind of I founded one of the early hedge funds, crypto hedge funds, in 2018. So I'm all about trading. I love trading, and that was my passion and how I got into it. And the movements, which are crazy in crypto, for someone with a risk appetite like mine, was really good, and hence I set up a hedge fund. But realistically, I would not advise that. I think risk management, even going into those trades, is very, very important. Other than that, I would add the only other thing is diversification. Realistically, don't put all your eggs in one basket. And the final adage that everyone's heard is, invest or trade as much as you can afford to lose. And that really, you got to really think about that one, guys. A lot of people see the movements and their friends, they 10x something in a week or something on a bull market, and they go and do it, and the market suddenly plummets off the top of a cliff, and then they're sitting down crying and they hate crypto. So that's all I would add to that.
That's a very important point, Karan, what you just said. And I think I mentioned this last week, but guys, if you just, to give you like a very quick example, if you go at any regulated platform around, like website, if you scroll at the bottom of any of this regulated platform, you will see like the amount of clients that are losing money. And I can tell you, it's never below 60-70%, which means 60%, 70%, and so on, people are losing money by doing this. This is really, really, really important.
Yeah, no, 100%. I tell you, I think you're being very kind, Salvatore, there. I think it's really 90%, isn't it? Really, most people lose. It's the 10% that win. And it's partly luck as well. Apart from doing your kind of research and being an extraordinarily good trader and understanding technical and fundamental analysis, what it comes down to is a bit of luck as well with crypto. And the funny, just one other thing I'll add onto that is in the traditional world, they call, this asset class the exotic asset class. And that's a kind way to say that it's a very high risk asset class. So always be aware of that, guys. But just one other thing that's popped into my mind is, we're currently in a very deep bear market, and the chances of assets going down is highly there as well. Could go up, nobody knows. But I think in these times, actually, these decentralized exchanges and these decentralized DeFi protocols are actually where you should be at. If you've put like $1,000, $100, or $10,000 in, and that's money you're looking to, if you like, invest in this industry, this is ideal, really. These platforms like WingRiders, you can like accumulate more of those tokens, and there's no guarantees of another bull market. But I personally, this is not financial advice or anything, but I've studied the cycles. It's definitely coming. When it's coming, God knows. 1 year, 2 years, 3 years, 6 months, nobody knows. Okay, so it's the ideal time to be providing liquidity, farm it, get more tokens that you like. So in the bull market, what's going to happen? Obviously, those are going to appreciate. I mean, that we all know. That's the only other thing I would add to it. But yeah, excellent point, Salvatore.
Yeah, no, brilliant points from all of you, Ran, Salvatore, Karan, and definitely the common thing I hear a lot, and I think we've all shared a lot, is pretty much like the next bulls are actually made in the bear markets. The wealth builders build their wealth when the market is down, not when the market is up. And it's good we've talked a lot about or we've kind of hinted a lot at what it means to be to be very familiar with the risk and knowing how to assess your risk. So I can't wait till I can't wait to start talking about that in the next about 5 to 7 minutes. But yeah, for everyone in here, this is the WingRiders community session every Fridays. We're talking everything features of DEXes and risks in DeFi. So far from our panelists, we've heard a bit about how they go about, using DEXes and what what your portfolio management strategies are like, what your trading strategies are like. So definitely recommend, taking some notes down, getting your friends and family involved, like and share this space, everyone. Let's get more people involved. But and to anyone out there who's trying to catch up with what we are talking about, definitely check out the pinned posts up top. And those are 2 great threads to read through to know what we're talking about. But yeah, WingRiders DEX, for example, is like a very common DEX using the Cardano ecosystem to perform a lot of DeFi activities, and it's filled with a lot of features that Rand and Salvatore and Karan actively use and have actually shared today, such as liquidity pools, how you can come in and you can be a liquidity provider. Today, every time you use, say, Coinbase or Binance, there is someone on the other side who's literally offering liquidity for you to trade on top of, and they make the rewards, or they make earnings or passive income from the fees that goes on. This is something that's like usually been siloed to a lot of centralized finance entities or TradFi entities. But with DeFi and DEXes like WingRiders, you can actually be a participant and you can actually build this kind of passive income stream with something as simple as providing liquidity pools. And even when you get past that point, you have access to these things, like liquidity pool tokens, or what some of the DeFi DJs would say LP tokens, that kind of thing. It's like, wow, I just provided liquidity. I'm earning, some tokens based on trading activity. And even these tokens I'm earning, I can even do more with. I can find another pool and go do what they call yield farming, where you can stake in those tokens, and based on the activity of the markets and everything, you can still earn, let's say, a double layer of of earnings and yield on top of your initial liquidity provided. So a few things to look out for in DEXes. Some of the features you really want to find in a DEX is liquidity pools and yield farms. Those are the things that get you going. Those are things that get you from from zero to hero in the DeFi space. And those are things where, depending on how vigilant you are and how guided you are, you get to make the best financial steps. I have a question for Karan, but before then, maybe Rand, you wanted to share a little something into that?
Yeah, I was just kind of go back over when we were talking risk management and something. Just one other thing to note is just controlling emotion. Like a personal rule that I have is whenever I go to take a screenshot of my portfolio doing well, that's a sign to myself to start selling some things. So when emotions are running really high and I'm euphoric, basically, and I feel like things are going really well and I'm making all this money, I usually try and snap a screenshot to show a friend. And that's kind of like a mental note, a rule for myself that I've made to start taking some money off the table and lowering my positions, as well as vice versa. Like this week, a lot of very red days in the market, a lot of stress and people complaining. I've actually been purchasing pretty much all this week during those red days. So just being aware of, sentiment in the market and your own emotion is very important when it comes to trading or investing in general.
That's a very good way, Rand. That's a very good way to take a screenshot and remind yourself on a very conscious level when it's the right time to sell and buy.
Yeah, we're definitely seeing how much of a shock Rand is in the waters right now. So everyone pay attention to this space, There's some interesting strategies being laid out over here. Thank you for that, Rand. Karan, so something for you, and this is something I think WingRiders pretty much excels well at, because DeFi is not just on Cardano. It's on Ethereum, it's on Solana. We have people like Rand who do active DeFi not only in Cardano but in Ethereum as well. We have Salvatore, whose team focuses on DeFi and Solana and Ethereum and all across the crypto ecosystem. But there is something unique that goes beyond, say, just finding a DEX with a liquidity pool or just yield farming, because you can only go so far with those things as far as we have seen. If it's either the liquidity pool is doing well or the yield farm is doing well, but other than that, you're pretty much stuck at it. And even sometimes you end up losing so much, or you end up losing some of your value just participate in these very basic activities in DeFi through DEXes. But there's something very unique that WingRiders, kind of puts out there for a lot of users to experience. And it's the concept of auto staking, how, you can provide liquidity into a stake pool, but while the DEX uses your liquidity, the underlying protocol, that's the Cardano blockchain itself, still supplements you with proof of stake rewards. Pretty much you get to triple gain or quadruple gain if you think about it. Do you want to share a bit about that for us, Karan? This is something that's very unique to WingRiders. Yeah.
Yeah, thanks. Good question. I mean, yeah, all I suppose AMM DEXes, yeah, you can swap on, and they have different methods that they try to obviously reward liquidity providers and yield farmers. I suppose we've probably gone one step further, and we started earlier, which is something kind of, I won't say we innovated necessarily, but we innovated in the Cardano space. Yeah, you mentioned auto staking. So let's take a very simple example. So you want to provide liquidity. You want to buy a token, okay, and provide liquidity. So liquidity pools are generally binary. So you have to provide 50-50% of, say, ADA and something else in Cardano or any other liquidity pool. Let's just give an example of ADA and MELD, for instance. So you got to provide 50-50. So if you don't have MELD, you got some ADA, you go swap it, and then you got both pairs. As you mentioned, Cardano is a proof of stake blockchain. Therefore, in order to secure the blockchain, it requires people to stake their Cardano, right? So what happens is, for that staking, you get rewarded. The rewards are around 4.5% annually. Okay, so when we started out, what we did automatically, instead of holding the ADA and going and staking it for ourselves, essentially, we went ahead and auto staked it in some sort of predetermined farm, where that sort of percentage gain, whatever it is, gets pushed back into the liquidity pool and shared amongst the liquidity providers according to the portion of liquidity they own within the pool. So that's one. Okay, that's the liquidity auto staking. But now the last few months, we've actually developed voting for stake pools. So you can go onto the DEX, whichever pool you're in. Obviously, it has to be an ADA pool, ADA and another asset, and you can look at who to provide liquidity to. Okay, because you can delegate that to a pool, large or small. We do kind of advise, kind of looking around, not just advocating everything to the first pool you see. Have a look, learn a little bit about it. See if a small pool can give you the returns equivalent to a big pool. Do your research, essentially. So now, as a pool, say the ADA MELD pool, collectively a vote can be taken where to stake everyone's ADA, if that makes sense. And then that's the new feature we've brought out. Obviously, once you've done that, you're getting stake returns, you're getting a percentage of the swapping fees. So that's two kind of rewards there. Then you get your LPT tokens by providing that liquidity. You take that, you farm it. Now we've got single yield, we've got double yield farms. The single yield farms give you one more sort of WRT hit, if you like, as rewards. And the double yield farms, for instance, we don't have one with MELD. So say the drip one. So if you provide liquidity to the ADA drip, you get the LPTs, you go to the farm, and that farm has double yield farms. So you get drip tokens, you get WRT tokens, you get a percentage of the fees, and you get your staking rewards. But that's not the end of it, okay? We've introduced a recent feature called the boosting vault. So if you're holding more WRTs, because we're moving to a decentralized governance model and eventually a DAO, so we like people to obviously hold on and keep some WRTs and put them into different places. The boosting vault, what it does, when you add that into the boosting vault and you're farming, it actually increases the yield. So it doesn't give you another token, but increases the yield on that farm. So that's the sort of various features of the DEX in a nutshell.
Yeah, that's a very unique offering, because then it helps people hedge their activities much better. a lot of people try to like fight these concepts of like say impermanent loss, hoping they get, you know, trading fees, you know, that are sufficient to cover the loss. But then now in Cardano and through DEXes like WingRiders, people don't just get the trading fees or the yield farming rewards, but they also get the proof of stake rewards that come from the blockchain. So it's definitely exciting to have a third or fourth, you know, kind of cushion of yield and returns to rely on. And I definitely recommend everyone take a look at that. To read more, definitely check out the thread we shared up top. It's the latest one up top to learn some more. But, you know, thank you for that. And now we're about to get into like the juicy stuff. And by the way, Karan, I think we got a bit of an alpha in your answer right there when you mentioned governance. So to anyone out there, if you know, you know, but you heard it here first, there's some governance stuff happening in here or coming from WingRiders soon. But yeah, let's move to the juicy stuff, the stuff we've only kind of flirted with and hinted at for so long. But it's like the biggest thing we constantly think about. You know, let's use the context of a car. They say when you're driving, you don't think about yourself, you think about everyone else around you. That's what makes a great driver. And I think that's what makes a great trader as well. When you don't just think of yourself as a trader, but as how the market or the world around you revolves in order to make like the best decisions. And I'll come to you with this, Rand. You know, market volatility. In this case, we're talking about the risks in DeFi people. We're really about to dive into like the things you should watch out for. How can you go into DeFi as a newbie and make, you know, good steps? How can you avoid making, you know, bad steps? How can you prevent, you know, shooting yourself in the foot? But, you know, what are the things you should consider to avoid risk or to mitigate risk? Now, Rand, market volatility. Tell us a bit of your perspective. You know, crypto and for that matter, DeFi is like constantly at the mercy of volatile markets, you know, and it's out of our control as users and traders. Is this something you think, you know, newbies should, you know, keep at the forefront of your thoughts? Is this something, you know, they should really plan for in advance, market volatility? Tell us a bit about that from your perspective, Rand.
Yeah, I think market volatility is something to be embraced. That volatility is where money is made. And you just really have to, that's where proper bet sizing comes into play. If you're really over leveraged into any one trade, especially one that's very volatile like cryptocurrency, that can really play with, again, your emotions. And you can kind of see how everything we've talked about kind of ties into each other there. You know, as long as you keep your bet sizing proper and you have cash behind to play, volatility can be your friend. And learning how to play those ups and downs, I think, is very important over a long market cycle. Some people, I'm not really a day trader per se. You know, sometimes I'll make a trade where the information is there, but I don't really try to play, you know, day trades on limited information. I really think of it as a long DCA your way in. And as you see the volatility of the market play out, you can pick and choose where you take profits and where you put capital to work. And I think it's very important. I think it's something that new people often misread, and they look at volatility as very bad. And a lot of that's because when you're new to investing, you get very emotional and you over leverage yourself into any one position. And that volatility is a lot more stomach turning than somebody who's managed risk properly and then can play that volatility as well.
Right. So this is would you consider it as how a surfer regards the ocean and the waves? You don't necessarily run from it, but you know how to deal with it. You know how to, you know, approach it. Is that a good way to kind of categorize a trader to the market?
Absolutely. For somebody who's looking to actively trade and not kind of like slowly DCA or looking at traditional markets where you're getting dividends and things like that, if you're an active trader or a surfer, I really love that analogy there. You're kind of running at the waves and you're looking for those high troughs and, you know, peaks of the waves, and you like that volatility. That's what gives you the excitement and the momentum you need to be profitable or to be a good surfer. So that's a great analogy. I'm probably going to use that in the future, Emmanuel.
Awesome. Thank you for that, Rand. Salvatore, you know, I see you have a bit of that for us, and I have a question for you, but please take us away.
Yes, thank you. To be honest with you, I think volatility is the most beautiful thing we have, like on a market, right? Because as Rand was saying, like you can take the advantage of the volatility, which means you could potentially make a lot of money, but at the same time, you could potentially lose a lot of money, right? So if you are a day trader or if you are a long-term trader, I'm coming from a traditional financial market, right? I used to work for a trading company, so I used to hang out quite a lot with traders, and they all told me one thing, right? You have to be prepared, like technical, right? For the market, you have your own strategy, and you stick with the strategy. So if you plan something ahead, so you have to come into the market, you have to understand fully what's going on from a technical point of view. But what really makes the difference when it comes not only to trading, like even in investments as well, long-term investment, is the mindset. 80% of trader is mindset, 20-30%, whatever we want to address it, is technical stuff, right? So if you are well prepared from a psychological perspective, that will makes the difference as a trader investor. And obviously, from a technical standpoint, if you are testing a specific strategy and that strategy is working on a long time frame, stick to it. You don't need don't be like one of those who always want more, and then in order to get more, they just change, let's say, the setup, or even to be very to put it like in a very simple way, if you have a take profit or stop loss at a certain level, just stick to it. That's it. Like, you make your day. You've done. I mean, you had some losses. Accept the losses. You cannot always win, right? For those who don't know what take profit and stop loss mean, is like take profit is like an automated order to take trading profit at a specific price level, based of course on your technical analysis. And at the same time, stop loss is an automated order to take trading losses, unfortunately, at specific price level. So what I'm saying, like, stick to your strategy, stick to your perception of the market as well, because maybe I might look into the market and saying, okay, this particular asset is gonna hit 100, and maybe you look at the market and say, no, in my opinion, it's gonna hit 120. So it's very how can I say, subjective. Like, it's very personal how you see the market. But yeah.
Right. No, I think that's one key valuable info for all newbies and even veterans in the DeFi space. Know when to get out. Don't get, overridden with greed. Stick with the process, stick with the program, stick with the strategy. That's very key. And sticking with you, Salvatore, we're going to move on to like the next, risk to really consider, something that maybe to many of us, we have control of. And and by that I mean, like, say, what are some of the things you should look out for in the DEXes or the DeFi tools you use? For example, in terms of software security. Every day we know that in other ecosystems they go through all sorts of what people commonly call hacks, but like just result of like bad written software and bad written programs that people trust millions, if not billions of dollars in. Can you tell us a bit about how newbies should watch out? Like, when a newbie is about to use a DEX or use a lending protocol, what should they look out for in that program, in that application? What's some of the key things to look out for?
Okay, first and foremost, if you are one of those guy, let's say, that like to invest, like to differentiate a little bit your portfolio, thanks to DeFi, we can track all of your investment in one place. All of your, if you're investing, like, you are doing some yield farming on Ethereum or Cardano, like EVM, non-EVM stuff, let's say, right? You must have like a platform where you keep tracking of all of investment, right? Because you want to see straight away in one platform the big picture of your investment, what's going on, right? From, like, obviously this is from a DeFi dashboard perspective. On top of that, we have like an extra security solution plus data. Okay, I believe the key here is the data. You have to gain as much data as you can, in order to have like a clear picture of where you're going to invest your money, what platform you're going to use, how long you're going to stick your money in that specific platform, or what's the percentage of yield you are getting on the specific platform. Again, like in DeFi, we have like it's a different solution based on different needs. Like we recently launched like an explore opportunity, which essentially is an APR aggregator where you can check the best best yield on the market. But at the same time, it's really, really important to mention the security here. It's super easy to get involved in a very scammy project just because we are let's say we are affected by our FOMO psychology. Again, like we discussed psychology like a few minutes ago. Like it's super easy to get involved in a project where you just simply like put your funds and it could be like an honeypot or a rug pool on whatever. I don't know if you remember that there was like a period of the very famous series on Netflix. What was the name? Like the Japanese or the Chinese? I don't really, Asian. There was like an Asian big famous series, and they launched this this project, this token.
Squid Game. Do you mean the Squid Game and the Squid token? Oh no,
that's the one. That's the one. Man, that Squid Game like went like like it really skyrocketed in a matter of days. But what the majority of people didn't realize is that like once that was clearly, we call them honeypot, right? Honeypot is like let's say when you can buy a token but you cannot sell it. So that's really funny somehow, because I had like calls from many of my friends say, Sala, I invest 100 quid now, like I have like 100K, blah blah blah. So my first question was, can you actually withdraw those money? I don't know, because I didn't even try. So that's what happened. There was like a huge hype, obviously thanks to the Netflix advertisement and so on. So these guys, they took advantage of this famous series to launch a token, create the hype on it, get all of the people investing on the asset. But that was like really like a honeypot. So you can buy a token, but you were not able to sell it. So essentially, just throw your money away. And again, like in DeFi, we track, like we have a solution called Rec database. So if you go like on DeFi.app, you can see like a Rec database. It's essentially like it's a collection of all of the projects, right, based on chain, category, and type of issue. So we cover issues like DEXes scam, from flash loan, exploit, rug pool, honeypot, and so on. So we categorize all of them in one database. We have like an entire team working on that. So if you want to start investing in a project, so again, like what platform should you use? Like try to get as many data as you can on different platforms. Like I want to check like if that project has been rug pulled or scammed. Like search for that project, see what's going on. Like try to dig as much as you can to understand who is the team behind. Are they like is the team like anonymous? Is someone that like that? Guys, thanks God we live in an era where we have internet, right? So we can really go in depth when it comes to research and find out literally everything. So like use this tool to to understand like platform, to understand asset you want to invest, to understand like who is behind this platform, who is behind this protocol, who is behind the token, what the token is doing. Like there are like many like ways to understand. Like obviously it's not 100% like but there are many ways to just mitigate your risk when it comes to investing. And I mean that as Rand was saying before, crypto is very volatile. So I would ask myself like, what do I do to mitigate my risk as a trader, as an investor? And you need to like simply like you need to ask yourself a question like, what do I do as a due diligence before investing into a project? Like what is my, and obviously there is like a template, I would say, but obviously you can create your own one step by step. Okay, before investing my money into XYZ protocol. I want to do XYZ steps, right? And also, like, do I know like all the risk involved when it comes to investing money into a protocol, into a platform? Like high yield, are we really affected by high yield? Can that be like a Ponzi scheme, for example? Like, you know, like, get as many data as you can, and obviously just never forget, don't let your psychology guide or drive you when in like a high return investment, because when it's too good, it might most likely it's not it's a scam.
Thank you for that, Salvatore. Thank you. And we get the message of really doing a lot of good due diligence, especially in what we interact with, and still sticking to the matter of like just due diligence and like the software we use or the tools we use or what we interact with. I think one key thing to look out for is also audits of the platform. We don't just go into any building to say put our money in. We go to like banks which we know and are accredited and kind of have the necessary licenses. And I think the same can be said for DeFi, where for every DEX you use, they have to have an audit. An audit is pretty much like a certification to show that, hey, some people who really know how programs should be built have looked at this particular DEX platform or this code and have said, oh yeah, this is good. You can use the or you can use this amount of value with this program. So I think it's safe to say that for everyone who's entering into DeFi and is interacting with your very first DEXes or DeFi applications, it's very key to look out for the audits and then the track records of like the various dApps out there. And I'm sure DeFi Yield is one that gives access to these audits, for example, of anything. But then also still sticking with certain kinds of exploits, all right? And then I'm glad Salvatore brought up the case around Squid Token. We'll come to that shortly, or the context of that shortly. But then still to exploits, there are even cases where, in DeFi, everything we do is based on how much information we have, all right? And by saying that, we mean, say, the price feeds. When we trade in DeFi, we're not trading on the global traditional market. So we need to find ways and means to understand, oh, how much is this really being sold for? So we have these oracles, as we call them, these softwares that tell us what the price is. And there are scenarios where these particular price feeds could get hacked. They could get, compromised. And, maybe ETH is selling for, $1,400, $1,400. But because the price feed of the DEX you're using has been compromised, you're seeing ETH being sold for, $100. And now you're panic selling. You're selling all your ETH in that DEX because you think it's actually $100 when it's really $1,400, and you've made that loss. So these are like some of the things to look out for. But Rand, maybe you can give us an insight into like your experience with like how you choose your applications to use and what to watch out for in terms of these price feed manipulations and DEX audits and what have you. Rand, you're on mute. I think he might be away from Mike right now. Karan, maybe you want to
yeah, I really love, that's a great question. I really love, honestly, this is just straight from the heart. I love the DeFi Yield product and what they have going on. Yeah, I really love, that's a great question. I really love. Sorry, there must have been an issue there with the audio.
Yeah, I think we can hear you
but
now.
I do love the DeFi Yield product as a way to look at my positions and everything going on Ethereum, and I think it's going to be a great product when it comes to Cardano. Really excited for that. And those are great places to check exactly that, looking at the information they put out and auditing all the different DEXes. I love to hop into Discords, community Discords, and start talking and asking questions. And when it comes to price oracles and pricing, I really love going to like CoinGecko, CoinMarketCap, and checking out the pricing on there, because on CoinGecko, you can see the pricing from multiple DEXes or even centralized exchanges. So it's a really good place to check pricing from multiple exchanges at one time. And then just really doing due diligence. I think it's important for new people to DeFi and crypto in general to understand general terms like market cap or token emissions and looking into white papers and GitHubs and making sure all that information is there and that it makes sense to you. And you just kind of try and de-risk yourself with as much information as you can pile on.
Right. Thank you for that. So definitely diversify how you look for data, how you check the prices of items out there, because you never know, when something can go wrong. And also always be on the guard. Before you use this application, ask yourself, hey, has this been checked? Is this safe to use? Am I going to immediately lose my money or something? Because today you open 100 different applications on your phone today, and we never really stop to ask, hey, is my data safe? Is someone spying on me? Is someone about to steal my password? With crypto and DeFi, money is at stake. A lot of money is at stake, and it's usually the first thing you interact with. So it's very important as a newbie to really look out for these things. I think we just lost Ryan. He might be having some networking issues right now. But yeah, Salvatore touched on something a little bit, and maybe Karan, you can share on this before we switch into our Q&A session. Rug pulls, okay, and this is something we touched on a bit last week. But as Salvatore just mentioned, the squid token, which we all saw, perform a massive rug pull for a lot of people out there. Which makes us as a question: what should a newbie look out for? What should a newbie look out for when they're jumping into new tokens? What are signs and symptoms that lets someone know that, okay, this is not a safe asset to jump into? Definitely avoid that. Don't touch that with a 10-foot pole. Karan.
Yeah, no, that's a very good question. I mean, there's a framework that I think you can use. In terms of DeFi risks, there are probably 4 categories, I would say. Say smart contract risks, definitely. There's counterparty risk, there's legal risk, and there's token exposure risk. So just to kind of give you a flavor of what I'm talking about, when I talk about smart contracts, have a look at the security audits. I mean, that's been mentioned by other speakers tonight, and that's really, really important. An audit done by, for instance, a reputable firm, that's a good sign that that project is kind of on the right tracks. These audits aren't very cheap, so a rug pull essentially project wouldn't go and pay whatever it is to do one of these audits. Have a look at if they have a bounty program available as well. That helps obviously with the security as well, that they're actually offering things to white hat hackers, as we call them. They're the good people who will look, and if there's an issue, they'll report it for open source code. Without going into the code too much, look at the transparency of the project. When they say something, are they actually doing it, or is it just a lot of sort of shilling and saying they're going to do things? Look at the communication, look at the different channels out. We mentioned Discord, look at the Telegram, look at the announcements, and when things come out, yeah, well, okay, this project is on track. A point that's sometimes contentious, and this I really believe in, is look at the external funders. If you've got a project that's been backed by VCs and various other kind of big investors at the beginning, and it's been done properly, though, not them sort of swallowing up 50% of the tokens, but they've been funded. That's a really good intention. That's a really good indication of a project that's solid. And why is that? Because these guys have got brain boxes working day and night, basically analyzing these projects. So they do a lot of work for you. So if a project's backed by 5, 6, 7, 10, whatever really good kind of backers at the beginning, just to see the project, that's a really good sign. And the likelihood of a rug pull is probably far less. Look at obviously the legal risks as well. Different jurisdictions have different types of obviously laws and regulations. You need to really understand sort of the jurisdiction you're in and the project's in, and really kind of look at those risks as well in balance. And finally, there are other risks obviously we need to consider, like impermanent loss and things like that we mentioned, but nothing really to do with rug pulls. Okay, so do your own diligence, really look at the projects, look at the kind of product, look at what it is, and does it function well, and is the sort of roadmap sort of milestones being delivered. That's usually a very good indication with the other things I mentioned earlier.
Awesome, awesome. Thank you for that. And with that, we will be switching into our Q&A session. So we're going to be bringing some speakers up. If you have any questions or contributions, please don't hesitate to put your hands up, make a request. This will be the last 15 to 30 minutes of the show. So definitely bring in your last minute friends. This space is recorded, so definitely share that out there. So all those who missed out can definitely listen in. We're bringing in a few people in. We have, this could take a second, but yes, please do. I'll say that, you know, we really put out these two threads to shed some more light on what it means to come into DeFi, because it's not all, you know, rainbows and lollipops. There are real things that go down. There are real, you know, things at stake to really be on the lookout for. And sometimes comedic as, say, Rick and Morty. There's an episode where the character pretty much changes the value of the national currency of the place from $1 to zero, and everyone panics and everything goes like downhill. And that's something that happens in DeFi. That's something that can happen in crypto and has happened in crypto before. And so you realize a lot of these things that, you know, become a thing of, you know, comedic activity really translates to like real world, you know, events and costs. So yeah, I think everyone should really pay attention to how they enter DeFi and how they use DEXes. WingRiders does its best to provide the best tools and, you know, features to make your experience in DeFi worthwhile. Intellectual honesty. How's it going with you, and what do you have for us today? Thanks for listening in.
Thank you for letting me speak. So I wanted just to talk about the whole decentralization angle. So obviously when the Nomad Bridge hack happened, I guess there was a bit of a, you know, you guys were kind of caught in a quandary whether you pause swaps or not. And it's ironic that we've since had a vote where people have supported actually you guys in what you did. But obviously in doing so, that sort of, you know, it's that balance between, you know, is it truly decentralized if you can pause swaps or not? And in many ways, one could argue you're actually protecting users by doing that. But then in other ways, those that wanted to get out and almost pretty much dump their bags, you didn't allow them to do that. So, you know, it's that balance between who you protect and who you're not. And it's like, what sort of responsibility do you think you guys have on ensuring that actually, you know, going forward, if something like that happens again, you know, that course of action? I know that a vote was had, but equally that vote was with, you know, let's just say it was a Discord vote, right? Is that binding? Is that forever?
Hey, intellectual honesty, that's a great question, and I think you've got some very valid points there. I think it's about making a decision when, if you like, a catastrophe or something like that happens, right? It's what do? Do you wait till every kind of, you know, the valuation of those things has gone to zero, or do you actually, you know, make a decision? And this was a very, very difficult, obviously, decision for the team to make. Is what do? Do you wait? And, you know, because the voting processes, I'm sure we're all aware, may take days or a day at least, and that may be a day too late, right? So it's a very difficult one. Then we had to think, okay, what do we do? And straight after we did that, we obviously came and we put out the poll to say, what should we do in situations like this? Because remember, when you go to the fully decentralized model of any type of organization, so when we move to a DAO, these things actually are sort of very bold reminders of what could possibly happen. A black swan event, you know, on another project can affect you, and the whole ecosystem, if you think about it, is very interconnected, right? So, and things happen very quickly, and decisions have to be made, and therefore that poll had to be taken. And we were, you know, very glad that obviously the community decided that actually in situations like this the team should intervene, right? And to protect everyone's funds, because obviously we had a lot of liquidity providers. But you can't please everyone. Unfortunately, decisions had to be made. We think we did as much as we could to do the right thing, obviously, to halt those and then come back to the community immediately. It happened, I think, in the middle of the night, right? So, we were all asleep realistically when this hack happened on the Nomad Bridge. And then, you wake up, you made the decision, and then as soon as we got together, we thought, okay, we've got to put a poll out there. What do we do in future if something like this happens, or what do we do with the current sort of state of swapping? And the community voted their way. And we're happy about the fact that the community had a chance. But the thing I will mention again is that in a critical situation, in a code red, what do? Do you just let it run? Do you do nothing? Or do you actually go out there and make a decision that you think is the best? Obviously, our team are developers, they're techies, they kind of understand what's happening at that moment. And many of us, like myself, maybe don't understand. I'm not a developer, I'm not a coder. I don't really know what the best course of action is. And obviously a lot of if you like, liquidity providers are not either. So sometimes it's best to leave it to the people who know and do it. And the community also saw it that way, which is, I suppose, a good thing, right?
Well, here's the thing. I think it's just the irony of the situation in that obviously, I think most people would vote to protect funds and whatnot. But then if you're looking down the line in the future with all these sort of government regulation coming in, if it's possible that you guys can intervene, then it sort of makes it not really completely decentralized. So now if regulation comes in, they'll say, well, you guys have got the ability to pause trading, so you should have complied with X, Y, and Z.
To a certain extent, yeah. So, for instance, decentralization is on a continuum, right? And at the end of the day, who does the DAO belong to? Who does the decentralized autonomous organization belong to? It belongs to the members. They have to have the right to make the decision of what should and what shouldn't happen. And I think that's what we kind of ascribe to. Obviously, we're not a DAO at the moment. The team manages the portal, but we're moving gradually towards there, okay? And we made the decision. But even in a decentralized autonomous organization or a DAO, the members still have a right to give power to the team that's actually at that point running it, right, to make decisions. But that's their decision, not the team's decision, if that makes sense. But of course, yeah, I mean, the ideal situation is you give everything to the code and the smart contract, and it makes the decisions for you. But, that's not always the case. And, in most situations, at the end of the day, the members, I'm talking about a fully decentralized autonomous organization, we're not there yet ourselves. It's all about this kind of debate process, just like a good question you have today. It's a great question, something that should be discussed, and also we should be transparent about what happened and what would happen in the future. And at the end of the day, the members will make the decisions, not us, the team.
Well, thank you. Thanks for answering that. I'll finish now, but I'll just say thanks for answering that, guy. And I appreciate that. It was a difficult. It's like the first time it's pretty much happened on Cardano. Well, Cardano being affected by such a big hack. So you guys were caught in a quandary.
Intellect, it wasn't just Cardano; it's other chains. It's heartbreaking, But thank you very much for the question. I think it's a great question and great debate. And this is what crypto is all about: openness, discussion, and really kind of trying to never hide anything. It is what it is.
Yeah, it is an open public ledger after all. Everything that happens, is seen and traced back. But also makes you, put things into perspective. Like, some would say adversity maketh man. Others would say what doesn't kill you makes you stronger. And we can tell that, from the events of then, a lot of activity and a lot of changes have been, set, on the road to improve how decision making progresses. And I know Karan kind of let out a bit of alpha with regards to governance about a few minutes ago, but I think that's definitely a step in a very progressive direction. So once again, thank you so much for that intellectual honesty, and that's definitely it's in the name. But like, yeah, I think, and it makes us, it's really in theme of what we're talking about today. That is risks in DeFi. Like, what are the things that you should be on the guard for? We talked about the things that you have absolutely no control of, such as market volatility, and then even these black swan events, which pretty much like touch, multiple ecosystems in one go. So as a newbie into the space, you definitely want to come in. You definitely want to look at how are these particular infrastructures built, how are they set up to handle certain events, and what is your assessment of that? How comfortable are you with proceeding with your funds in such an application? Rand, you're still with us, and thanks for I hope the network issues solve themselves out. But what are your thoughts around what we can do next steps? Right now we're just doing regular Q&A, but next steps in terms of like how DEXes should step forward into the future as we get ready for like whatever next bull cycle there is, in terms of security, in terms of risks, in terms of like maybe even regulation. What's on your mind with that?
Man, you're firing really heater questions. That's a good one. I do think auditing is very important, and picking good auditors, that definitely understand your auditors and make sure there are multiple third parties auditing the contracts. We have a kind of a joke in my circle that if something's only audited by CerTic, it's most likely going to get hacked. So every time we see the word CerTic on an audit, we run away as far as we can. So definitely have to audit the auditors. But looking for things that the builders build in bear markets. So looking for people that are really innovating and not just building like a copy pasta product, that they're not just copying some other general DEX, and that they're adding real value and adding, I think what you guys are doing is really innovative when it comes to the being able to have your ADA staked and delegated to a pool. That shows real innovation and, really smart, competent builders that are on the edge of the bleeding edge of what's going on, and that you're not just following after a product that's copying to get liquidity and most likely rug or something like that in the future. So I think it's really important to follow the builders, follow people that are constantly in spaces like this and are willing to be open and talk about what's going on, and do your due diligence, join communities, and just kind of follow around. I also think, plugging live events, Rare Bloom and things like that are places to be at, to actually network, shake hands, and really get the alpha as you invest and understand the risks of things.
You know what? 10 out of 10. You handled those heat of questions very well, Rand. Power to you for that. But yeah, I think here's another question, I think, for the room, and maybe we can get some from Salvatore over here. We're talking a lot about mitigating risk. We're talking a lot about playing it safe. But, who are we kidding? DeFi is popular for its degens. So the question is, like, can you be a degen in DeFi while still trying to avoid risk? Salvatore, this sounds like having your cake and eating a situation. But what do you think about that? Like, being a degen but still trying to like not be risky. Is that even possible? Tell us about that from your perspective, Salvatore.
That's a very good question. Let's say like like the when you for those who don't know, like when you go degen, like when we say degen, it's someone who is really looking for really really high yields, so return on investment. To be honest with you, like, yes, it's possible, right, to like make money on a degen mood, but you really need to pay attention, you really need to be very strategic. First of all, very strategic, and secondly, you really need to be like quick, right? Because if you are providing let's say you're providing liquidity into a pool which gives you like a 1K percentage APY, like that could be there for like, I don't know, a couple of days, 1 week, 2 weeks. You have to pay attention on every single detail, which means it requires a lot of energies. This is my vision when it comes down to like degen mode. Like, it requires a lot of energy. then like what would be the second thought, like how much I'm gonna try, how much I'm gonna put into this degen platform. And again, like it really depends on, it goes down on your risk appetite. Because if you want to try with, if you are happy to try some degen platform and worst case you lose 100 quid, yeah, fair enough, like you can try, but you have to very like I think like majority of like those really degen people, like they really like plan everything, like they are, how can I say it? Let's say they are really like, of course they plan everything, so they're very strategic, but they also move into like different platform pools very quick, very fast. So like you cannot just provide liquidity in a degen project and then you just do something else. You check the pool in a week. So maybe like project is gone. It's a very good question. Like we need to analyze this from different angles. But in my opinion, like I don't like go degen because again, like it requires a lot of energy. You have to keep under attention, under control, or at least to manage in the right way. Too many things at the right time, and obviously, let's take into consideration also the risk involved in it, because most likely, like as much as you go degen, as much as you increase the risk ratio, and from like a very conservative guy, which I am, like I'm not super like into degen stuff, so I play the conservative role for the moment.
Right. I'm sure that is definitely that's definitely a question to ponder on a lot, and that's a question for everyone in here. Can you be a degen while still being conscious of risk and being safe? Can you do both? Like I think that might be the avatar mode of DeFi. If the avatar mode of DeFi is when you can finally be a safe degen, and that's pretty much like an oxymoron, because it's perceived to be impossible to be safe and still be a degen. How can you go chasing gains without tripping a lot? And still on the topic of degens, and we have Cardano Times over here as well. Well, not that Cardano Times is a degen, but perfect time with Cardano Times. What do you have on your mind?
Hey guys, sorry if I cut out or something. I'm driving right now, but I was just gonna touch in on the fact of being a degen, doing your investments, risk on return, stuff like that. So if you actually look at the last, let's say 5 years or so, the people that got the best rewards in the stock market were the people that allocated 1 to 5% of their entire portfolio to crypto. So if you look at these up and coming projects, like WingRiders token, or you look at a World Mobile token, stuff like that, take a small percentage of your, like 1 to 5% of your portfolio, and if you actually allocate them to these good degen projects, if you will, or riskier projects, then you're actually going to outperform the entire crypto market as a whole, more than likely. So that's how I allocate risk on return.
That's another great nugget of information to really hold on to, especially for all the newbies and those looking to learn. I think one thing which I remember, especially from the BSC days, so the Binance Smart Chain is known for having a very hyperactive, very degen-centric DeFi ecosystem. I'm sure all of us have experienced that at some point in our DeFi lives. But something which like moved from traditional finance into that ecosystem, into DeFi on BSC especially, was the concept of copy trading, or in this case, like whale watching. You'd have these degens who will look at the big wallets, the big accounts, and would actually do exactly the same trades these whales would do. And it always made no sense to me. I was like, they have the capacity to make those large trades. You don't. Why do you still try to copy trade them? Karan, maybe one of you could touch on a bit of like what are your thoughts on that? Like copy trading, like whale watching. Is that a thing that makes sense, especially if someone is degenerating around or trying to like make the best decisions? out there in DeFi? Let's do Rand first.
Yeah, I mean, I definitely think copy trading is a thing. Even in traditional finance, there's investing firms spun up where you can copy trade other investors. It's very risky. You have to make sure that the person you're copy trading is actually good. And I definitely think there's something to whale watching wallets in cryptocurrency. That's one thing, is the blockchain doesn't lie. It's all there. And if you can find some of those whale wallets to pay attention to, and you see them making proper moves, and their bankroll increasing, whether it be in US dollar value or tokens quantities that you like, there's definitely something to that. And watching smarter people in the room. I've always said I don't want to be the smartest guy in the room, because then if I am, I'm in the wrong room. So finding the whales to kind of pay attention to and learn from is very important.
Right. So I guess the memo on that is copy trading and whale watching is very risky. So tread lightly if anything. But yeah, I think we've touched on very key points today, especially in the world of DeFi. Mitigating risks, knowing what tools to use, what features to use in a DEX. I don't see any upcoming questions from anyone in the audience, so we could probably wrap things up. But as always, we'll be doing this every Friday. Special thank you to all our speakers up here, our co-hosts Karan and Salvatore and Ran, and even those who came up, Cardano Times and Intellectual Honesty. Intellectual Honesty, I think you have you have a bit of a hot mic. You have some last minute stuff for us?
Yeah. Hello. Yeah. Okay. So, no, you were talking about, other ways, I guess, to be a degen, and I was just thinking about Singularity Net, where they've got like AI potentially trading. I think they're just testing it right now on a Bitcoin portfolio and a Ethereum portfolio. So I think potentially in future that might be ways to eliminate the emotion of investing, to just give it out off to an AI. Now, obviously, you've got to have confidence that portfolio or that AI is good, and maybe historical performance and performance through this bear market will actually give us an indication of whether they're on the right track or not. But I think potentially in future that might be something that you'd sort of implement, maybe with a DEX, or with maybe there'd be a partnership or not.
Way to go on releasing that in the very last minutes of the show. See, now we're about to like sit back and really think, like, what does AI mean for the world of DeFi and trading with DEXes. So definitely something I think we can turn around and talk about in the future. Power to you for that. Karan, we're just about wrapping things up, but super thank you for gracing us with your presence. Same to you, Salvatore and Rand, and also again Cardano Times. Karan, any last parting words for our listeners and our newbies in DeFi?
Not really, just apart from saying thank you very much to the listeners and to the talkers, Salvatore, Rand, and of course Cardano Times and Intellectual Honesty. Thank you very much for your viewpoints, and very much valued, and hope to meet you again soon.
Awesome. Salvatore, anything from you?
Yes. Yeah, guys, I just thanks to all of you for having me again in this session, and obviously I got just a final word for the newbies. Like, if it's too good to be true, it's not true. Yeah, that's it. Have a good weekend and take care, and I'll see you soon.
Awesome. Definitely good words to end the day with. Rand, thank you for joining us in the time that you did. We know you're an active participant in the DeFi space. Shout out to DeFi Tycoon in the audience, and Blockjock from Freeloaders. I see we're joined by CRCI as well. They index different DEXes on Cardano, so thanks for joining us. And yeah, we'll be back next week, either the same time next week with our community session to talk about something new. I would love to tell you what we'll be talking about, but that would be considered like super alpha, and I would probably get scolded for that. So stay tuned. We have definitely an exciting subject matter next week, and we'll see you soon.